Welcome everybody. My name is John Stenhouse and I'm the Business Support Manager at the University of Essex, University Enterprise. So thank you for joining us today. Our webinar today on investment readiness is brought to you in conjunction with the Knowledge Gateway Innovation Centre and Essex Business School and is co-funded by Essex County Council. We have quite a long webinar today, which is going to be presented by Joshua. But in the meantime, I would like to introduce you to Neil Griffin from the Innovation Centre, who is here today to talk about the advantages of working from the University of Essex.
Morning, everybody. Happy Friday. I think John mentioned investment readiness then, and actually this is profit first webinar. So you are in the right place if that is what you're expecting. I'm sure that's just put the fear of God up Joshua as well. He's just about to present. So yes, you are in the right place. So don't worry about that. Who am I? My name's Neil. I'm the Innovation Director here at the Innovation Centre in Colchester. We are on the Knowledge Gateway. So we are part of the University of Essex, right on the edge of the campus, and part of the University Enterprise Zone, which John and Josh Clark are part of with the Angels at Essex crew. So they are based in the building. We are run by Oxford Innovation. So we have 27 centres across the networks. We're a national network. And the way it works is we are basically a profit share with the university. That's kind of how it works. We have been open since 2019, but we are Colchester's best kept secret. And the goal of the building is to really kind of scale tech, digital and creative startups. So our value proposition is to really help these startups to grow their business, give them support, be sounding boards. But we feel we're more than that. Our added value is to kind of help the local ecosystem, connecting, enabling people and really driving things forward, because that's what we're about. To give you some kind of highlights of 2021, because it has been a disruptive year. We've actually had a really good pandemic. When we look back to July 2020, we were only 10% full with businesses. We are now at 62% as of today. So, really proud of the team, really proud of what we've delivered here, and really proud of all the companies that have chosen to make this their home. We're sitting at around about 32 businesses. They're across multiple sectors, so they include software as a service, digital marketing, got designers, cryptocurrency, insurtechs, some media stuff going on, companies working with airline companies and F1 software. So it's a real mix of kind of people, businesses, which is great for us. During 2021, we delivered nearly 190 business support sessions across multiple disciplines, and we've had 5 businesses scale up during that time. So, we're really helping to drive Essex forward from that point of view. For me, we're kind of a fundamental sounding board and pushing people together. So kind of 2 out of 3 of the businesses here will work together in some way or another. And that's where the kind of innovation is in some of these centres. It's kind of helping to support that network. So the wooden dollars, if you like, are circling around the building and the ecosystem, which is, I guess leads nicely onto the webinar today and kind of why I wanted to be part of it and why I wanted to push it forward. My personal view is that most people and businesses can grow revenue. It usually involves, increased costs, and it usually involves discounting of some kind and often giving away stuff for free. And that includes your time as well, I guess. And it's kind of why many businesses fail to grow and why mainly startups fail in those first 5 years. So I think the goal for today is if I, John, Joshua can help save just kind of one business, or if you're in a larger business, gain some form of nugget that can actually help you and save you and get you to the next level, then kind of we've done our job, I feel. And this time of year is perfect for that increased focus on profitability of the business. So yeah, that's a bit about us, me, what we do. But yeah, feel free to kind of connect afterwards, and I will hand back to John Stenhouse.
So I would now like to invite our guest speaker today from the Essex Business School. It is Joshua Obeng-Nyarko, and Joshua is an FCA accountant and also a lecturer at the Essex Business School on corporate law. And Joshua, tell us a little bit about yourself before you start your presentation.
Okay, John, thank you very much. And happy Friday once again. I know that you've been wished 2 occasions, so let me make it 3 or 4. Right, so I am a lecturer at the business school, but my background is accounting. So I've been an accountant going past nearly 2 decades now, but I've come into academia and I'm teaching accounting and finance. But that said, I'm also somebody who has run its own setup and run its own business. And so I understand business from a practical point of view, and I also do understand business from academic point of view. So it is that too, which I think is driving me to wanting to be part of this excellent project at the Innovation Center. So I'm here to present to you this profit first, what it means. It's an excellent concept, and I hope we enjoy it. So yes, profit first. This is a special presentation. It is, I think, the first time probably most of you are hearing of it. It's very simple, but very, very effective. So, okay, so today's seminar, we have these 7 objectives, and the objectives are just to know the nature of business expenses, which I'm sure you all have one. GAAP principles, I'll explain the GAAP, okay? I'll explain what it is, the types of profit, realizing profit, then profit first principles. You will have examples of some practical examples of profit first, and then we'll have the final word. Okay, so the nature of business expenses, and I've put these slides there, not because I want to explain them one by one, but because you all run businesses, and you know, if there is anything which occupies a business person's mind is expenses. It's expenses. That is all we are in business to seems to do. So we have various types of expenses depending on the type of business you are running. So if you look at this list, I'm sure you can see some which or relate to you and others which don't. But that is the purpose. The reason is that I want this to capture as many businesses as possible. So these things occupied everybody's mind. Every business mind person thinks of all the fees and advertising and all the bad debt and charges and heat and lighting, and so many of these occupies us. And so it is as if we are in the business to just clear expenses. And so I'm not saying expenses are bad, but I'm saying it is something which focuses on everybody, every businessman's mind. And so have a look at this and see, where do you think I am? How many, maybe you pay all of these or you don't pay all of these, but this is just for you to say, John. Okay, so now let's come to this famous acronym or phrase called GAAP. See, GAAP is generally accepted accounting principles. So this is what everybody accepts. This is the convention, is a tradition, is what accountants do. We have the principles which we follow. And for the income statement, we say sales minus expenses gives you what? Profit. So this is what we all know as at the time I'm speaking, and I'm talking in my capacity as somebody who is a professional accountant. This is our bread and butter. Sales minus expenses is which gives you profit. Sales. So when you are selling, the first thing which comes to mind is expenses. And this is what we have accepted. It's because we know that when you have your sales, take off your expenses, then you have your peace of mind. Okay, so it is clearing our head of all the expenses, then we know that something is left, which we call profit. This has been how we've been running business over many years now. Okay, so this is the GAAP principle. So if we come to the balance sheet, we will have our own equation, but for purposes of this seminar, and it's just an hour or so and over, I want us to focus on the income statement. Sales minus expenses gives you profit. So your sales is what you sell. It can also be called the turnover. It can also be called the revenue. It doesn't matter what you call it. Whatever you sell is sales. Even if you are not in the business of selling things, if it's a service industry, you can call it turnover, you can call it whatever you call it, but it is sales. But once you do that, you know that you get your sales figure in your mind, expenses. Okay, and this is standard. Every accountant will tell you that, okay, before you think of profit. So what you call profit is very subjective. What is profit? What then is profit? What is profit? But there are many types of profit. So we would go through this. By the end of today, you'll be able to see the types of profit we have and how useful this classification is to us as business people. Right. So let's look at what I call the old school. The GAAP is what we call the old school. This is what we all know. This is the way we do things. So a simple profit statement. You have your turnover, which is your sales or which is your revenue. You take away your cost of sales. Okay, so maybe if you are running your business, you are not involved in putting together the cost of sales. But the cost of sales will be done maybe by the accountant or somebody else. It is that all the incidental costs which you have incurred as a result of arriving at the sales. So here you would include things like your purchases, okay, your raw materials or things you have bought and sold, and all the incidental costs to which then gave you the inventory to sell. So that those will come under your cost of sales. And then if you take that off, we have something we call the gross profit. And you bear with me because if you're asking, okay, why are we doing this? We're doing this because we are going somewhere that will let you contrast this with where we're going. So you have your gross profit. Now, gross profit is called gross profit because it has many other things, considerations, which has to be taken away, okay? This is profit before the operating expenses and any other expenses, okay? So it is profit, but it is not for you. It is profit, but it is waiting for certain things to be taken away. So we have the operating expenses. So your operating expenses here, I'll give you two examples. You have distribution expenses, you have admin expenses. So within the admin expenses, you can have your business premises and all the other things which comes in, yeah. Depreciation, so many things come in there. So almost all your business expenses, apart from that which occurs, which is associated with the purchase of your raw materials, comes under operating expenses. Your wages and salaries for your staff, employees, they all come there. Okay, so it's a huge place. It's a big place where almost the last pot for all your legitimate business expenses. And I know that most of you know this already, or your accountant will tell you some of your expenses or your expenses are tax allowable, and so these This can be, some can be claimed, and the rest of it. Okay, so when you take all that away, then you have your profit before interest and tax. This is what we call the operating profit. Okay, so here you are thinking of interest. So if you are now thinking of the bank, okay, think of the bank. The monies, the loans you've taken from the bank to run your business, and every business needs a loan of some sort. Okay, you need the loan you're taking, the interest payable that the taxman allows you, or the GAAP system allows you to declare that after the operating profit or profit before interest and taxes, and you consider that, you take that away. And then you have what we call the profit before taxes. Then you think of the taxman. Okay, so let me take the taxman bit from it. So current small businesses is 19%. So you take 19% of whatever remains profit before taxes, and then you have profit after tax, which is your net profit. So let's focus on this. So the question I'm asking here is that, you see, this seems brilliant. It's a very, very workable, very useful, very practical, yeah, kind of flow. And as an accountant, I mean, I cannot fault it, but see, we live to learn all the time. If you look at this format or template, where do you find yourself as entrepreneur? Where are you? Where are you? Okay, you can ask yourself that question. Where am I here? So you are running the business. You are taking all the risk. You are waking up midnight thinking and planning, and you are doing all the things to get the business going. But where are you in this profit statement? So in your profit statement, you are not there. Actually, you probably are there, but you are at the bottom end of it. You are at the bottom end of it. That is, for me, is an eye-opener. Okay, to see, okay, so why is it that I'm running the business, I'm taking the risk, you and your investors taking the risk, and the first thing you think about is your costs, and then the next one you think about your expenses, and then the next step you think about your interest, then the next one you think about your tax man. So you are thinking of all your expenses, all the employees, all the costs, and then you think of the banks, and then you think of the tax man, and then you become the miserable person at the end. That is, if there is something to be taken. This is what we think something has to change. Not because we are saying don't do any of that, but there has to be a better way of doing it. Right, so we have just a simple illustration, okay? So for all that I said in the slide before, let's say this is you, your business. This is your business, and your sales turnover, revenue is 120,000. This is at the end of the year, and then your cost of sales is 35,000. Your gross profit is 85,000. Your operating expenses, this is where your all the other things that I've said, your salaries, staff, office, administration, and all the other incidental costs running the business amount to 55,500. Now, profit before interest is 29,500. Your next step is, I'm thinking of the bank. Of course, when you take loans, you must pay. Okay, so you must pay the loan interest. Okay, the loan repayable itself doesn't come here. This is only the interest part. The repayable part, doesn't come here. It goes onto a separate account, which is the balance sheet. So then you have a profit before tax, which is 25,300. And then you think of the taxman, corporation tax, 19%, 4,807, and then profit after tax, which is 2493, okay, which is the same as the net profit. So you can see here, you, the entrepreneur, so far have not even taken a penny. You haven't taken a penny. So my question is, where are you here? Why are you doing the business? I'm not saying this format is wrong, but I'm saying it's a kind of challenging the paradigm, asking ourselves, the fact that we do things the same all the time does not mean it is right, or does not make it right. Does not make it perfect. So it is just reflective to see if there is a better way of doing things. So this is it, 20,493. So this is out of this, then you think, okay, maybe let me take something out for myself and pay myself. You, the entrepreneur, are not there. And I say this because, you see, the SMEs are the small and medium-sized companies are very important, yeah, to UK's economy, okay? So it is important that these businesses, your business is allowed to survive. See, there are 5.58 million small and medium-sized businesses, private businesses in the UK. And out of that, 99.9%, okay, 99.9% are SMEs, or companies like yours, with less than 250 employees. You see, so the economy depends on you, which means that you as a business person must survive. And so all the ways, the support, the help must be given to you to survive, because we depend on you, okay? The economy depends on you so much. So you are important in this direction. So we have gone through the old school, and I've asked many questions, not least one of which I asked, where are you in this profit statement? Where did you find yourself? So looking at what we have just done, or the profit statement we've just seen in the previous slide. Okay, if you did something like that by yourself, I'm asking you, did you manage to make a profit? If you put your realistic figures, your own company figures in it, okay, if you're able to do that, then you can know whether you would have made profit or loss, or good profit or bad profit. And what you call profit, is it something which is profiting you, or profiting the paper, or profiting the account, or profiting who? Now, how much salary have you taken? Okay, how much salary have you taken? How much have you taken in the course of the year? We only saw profit after tax at the end of it. And so I'm asking you, within that framework, we did not show any salary you've awarded yourself as a business owner. So for whose sake are you running the business? You're running the business, I mean, with your interest not in it, but your focus is to get the business to survive. But you don't take any salary, or you take salary, but after everything has been taken away. If you took a salary from our framework, where would you charge it to? So if we look at the gap system, and I want you to look at it, maybe you can ask your accountants or whoever does your accounts for you. Who is the chief beneficiary of the business? Who benefits from your business? And then if you can answer that, or if you can't answer that, my question to you is, why are you in a business? See, the answer to that, without me even prompting anybody to say anything, would be we are in a business to run expenses. We are business, we are in it, we get money, we make sales. As soon as we make sales, the first thing that comes to mind is your expenses. Deal with the expenses, deal with the expenses, deal with the cost, deal with the expenses, deal with the cost. And you, as the owner, as the entrepreneur, as the key person to the business, your survival is relegated to the margins, as if you don't matter. But you matter. You, as a business person, matter. Without you, the business won't be there. So we are moving to the next slide to see something simple. Right. So the summary of what we have here is that, okay, your focus in business is how to meet business expenses. That is something which I keep saying. So you get used to this kind of phrase. And I'm saying that deliberately because I want you to engage in you to engage with it. You ask yourself these questions, even after the seminar you go home, you ask yourself, why am I in business? I'm not, because you have to challenge yourself that you are not just here to meet business expenses. Okay, there's no joy in doing that, but we have to do it. We have to find another way of doing it. You will do everything. You move heaven and earth to meet all your expenses. That is, it's natural. It comes with our nature. We just want to clear that, and then we can have peace of mind. We can have a dry morsel of bread after paying every expense. Then we think that's fine. No, that is not fine. So, which means that you make all monies available to pay expenses, and then you practically pay everything that first, and you do not consider rewarding yourself as entrepreneur. This is dangerous. And I know that there are statistics which show how many businesses which fail, many small scale businesses which fail. I'm not going to bore you with our statistics, but suffice you to know that many small businesses start, and within first 2-3 years, they're gone out of business because of the way these things which we are talking about are managed. You see, because you are not taking any money, because you are not you are not taking any salaries or rewarding yourself as part of the profit statement, you end up taking large sums of money in one go. You see, not because you are angry, but because you think, okay, I need 10,000 pounds, let me take 10,000 pounds. And that can also put the business at risk, expose you to financial risk. That is not also very good. And so the middle ground is where we are moving now, okay? So right now, let's agree that we have been in business to meet our expenses. Now something new, something new. It's a breath of fresh air, okay? Breath of fresh air. It is called Profit First. Okay, maybe some of you must have heard of it. And even so, then it's better because you understand the principles. So what is profit first? What is profit first? Profit, the focus of profit first is to put you, the entrepreneur, the business person, your investors first. Anything you do, you put yourself first. I know somebody will be saying, how can you say that? How can you say that? How do we run the business if we put ourselves first? But wait. Yes, John. Okay, so this is based on a fantastic book which was published 2014 by Mike Michalowicz. It's an extraordinary book. I know sometimes we read books and we're thinking, okay, you know, what's in it? But this is very good. So I want to take you through the philosophy quickly, and then we go to the next stage. Okay, so what is this one about? The purpose of the Profit First, as I said, is to put the entrepreneur at the forefront of of the business. So that means that you come before the expenses. And I know this doesn't make sense because it is going against the GAAP wisdom. The GAAP wisdom says profit, sales less expenses, we have profit. Now this is changing that equation. This is saying you, after every sales, you come first. You come first, and then everything else will follow. But there are principles to it, okay? And there is a philosophy behind it as well. So the next slide will help us to unpack that. Okay, so now you have it, owners first. Okay, so we are, it's not like we are playing on words, okay? Substituting profit with owners. No, this is just what it is, owners first. And the owners here, I'm talking about you, the entrepreneur. I'm talking about you, you and your investors, and all people who have invested in you. Some of you have got other investors, you've got shareholders in your business, family people investing in you. See, it is a collective. So when I say I use the word owners, it means it's a collective for all people that have got direct financial stake in your business, you and your investors, okay, or those who have put up the equity capital. You come first, okay, you first. Now, it is important that you come first because under the first profit, when you don't come first, then business suffer. If you come last, then business suffer. You come first, and we will see why coming first helps you and helps the business. Yeah, helps you and helps the business. So let this particular slide stay in your mind. Owners first. Yes, hold on to this whilst we go to the next one. Okay, so now we have a new approach. You remember the GAAP approach was sales less expenses equals profit. Now, the profit first is sales less profit equal expenses. This is mind-boggling because as an accountant, I never thought I'll be saying this because you think, when do you ever think this will be? But here we have it. So we are putting the focus on profit, and not profit that you're going to take to make sure the business can run. You're not going to take any profit to imperil the business. You're not going to put the profits to your profit to take business to put the business at risk. No, but it is a way of running business which we are recommending with the way you do business, changing the way you do business, which is healthy for you and healthy for the business. Remember, I said, you see, the vast percentage of companies in the UK are small and medium-sized entities. And so, your survival is key to this economy, and it's key to employment, it's key to tax, it's key to revenue, it's key to everything. And so it is a way we have to find better ways to make sure that you stay in business as happy and healthy and without any serious going concerns. Okay, so the focus now is you, profit. Okay, so you remember that equation, sales less profit equals to expenses. Now, let's stay within this, on this slide and look at some of the philosophical underpinnings of it. And I've got something here, okay? This is something we call the Parkinson's law, okay? So a Parkinson's law, it came out in the 50s, okay, by a person called I think Nicholas Parkinson. And he came out with this satirical line in an article which he wrote to The Economist. And the first line of that article says that work expands so as to fill the time available to it. See, work expands so as to fill the time available to do it. And you think, okay, how does that apply here? How does work link to my business? Okay, what this one means is that from our business point of view, the demand we make upon a resource tend to expand to match the supply of that resource. Okay, so if we are given 1 year to do something, if you're given 1 year to do a task, you will use 1 year to do that task. And if you're given 3 months to do the same task, you will probably use 3 months to do the same work. And better still, the same task, if you are even given 1 month to do it, you will find a way to do it within a month. This is the Parkinson's law. You see, that is the law. So if we think that we need all the monies to run the business, then it means we will need all the monies to run the business. If we think that we have to freeze all the rewards we will give to ourselves as employees, as owners of the business, so that we can make the business, we can make enough available for the business to run. That is how the business will run. The business will, the demand for that money will expand. So work expands to fill the time available to it. And the analogy which is given is expanding motorways. See, so when there is traffic congestion in the city or in the motorway on the roads, then there is a clamor for motorways to be expanded, yeah, from 3 lane to 4 lane to 5 lane. Knowing that, or hoping, that's a hope, I like that. I like the word hope. Hoping that when we expand the motorways to 5, 6 lanes, then everybody will drive freely and, easily. But as soon as the motorway is widened to 5 lane or 6 lane, then there are cars which come and fill it up. That's what it is. But you compress it to 2 lane and the motorway will still cope. So this is an important philosophy, which I think we can borrow into the way we run our business. This is what belies the profit first. It is an important philosophy behind the profit first. Okay? You see, when you focus on yourself and you take the profit first, what happens is that you think that the business has a constraint. It has financial constraint because you've taken your bit first. Okay, so now the business has less to work with, which means you are scared that the business probably will collapse. But constraints are the best thing you can work with. Yeah, constraints. So let us remember that if something must be done in a year, it will be done in a year. If it must be done in a month, it will be done in a month. So that the point I'm making is that the smaller, the bigger the pot for all your expenses will mean that you will have expenses to eat that up. So if you substitute expenses with work, then you would say, yes, the adage goes that expenses will expand to fill the monies available to it. That is it. Now let's look at this. Now all of you, I'm sure, can see, if you can see what we have here, very, very, very simple illustration pictures. This is, well, it's not me, this is John, because Yes, that's John's hand. Okay. Interesting. Yes. So you go to the bathroom. You have your toothpaste is finished, but you need to brush your teeth, and then you're thinking, I can't go to the shop. The shop hasn't opened. So what do? It's immediately what comes to your mind is that, okay, let me find way. This is the first picture is how innovative you can become. You pick the empty tube and you look at it and you're thinking, okay, I need to find something from here. It looks like it's finished, it's empty. Right. So you hold it against anything which is there and you try to squeeze it. You squeeze it. So you will squeeze it because you think you want to get a little drop, something to brush your teeth. You go to the shop to go and get some later on, but that morning your creativity is set. And then if you do that and you think you're not getting enough, what do? You think, okay, let me find a way. Okay, this is toothpaste. Okay, it must respond to heat. So let me get warm water. Okay, you put that in the warm water. Okay, so maybe we are learning something new in terms of how we use our toothpaste. You never know. This probably might be an unintended benefit of this seminar. Anyway, just me. So you put it in a warm water. It melts it, and then it pushes it right up onto the end. Now you say, okay, I don't even want to squeeze it. I want to get everything from it because, so what do? You cut it open. So that morning, your disappointment of seeing your toothpaste empty or paste tube empty, you see, it's gone because you managed to clean your teeth before you went out. But look at the beauty. You see, immediately you were faced with constraints of non-availability and time not permitting you to go and get something else. Your imagination sets in. You see, your imagination sets in. You're beginning to become creative, innovative. And this is you at the third stage. And then you have your tube cut open into two, and you are able to have something. So when it is cut into two, then you see, you have even more there which can last for the next day. But until you did that, you thought this toothpaste was finished. You thought there would be nothing left. And probably if you had, let me ask that question. What would have happened if you had a new set of toothpaste? Okay? If you had a new set of toothpaste in your cabinet somewhere, what do you think would you have done? I know the answer because I've done it myself. You would have thrown this in the bin and then put the other one, unscrew it and use it. But look at what you are throwing away. Work will expand to meet the resources available to it. Costs will expand to meet resources available to it. The smaller the resources available to it, the cost will also squeeze to meet that resources. Okay, so here we have it. The core principles. See, so the philosophy, let the philosophy run through whatever we are saying, because that is the background. Yeah, let it be the background, and let's reflect. Whilst we reflect on the core principles. Small plates. We all go to restaurants, and there are two types of restaurants. Okay. There are some which you go, and I think they say we call it eat as much as you can. Okay. So those restaurants, you just go and you pay money or whatever it is, and everything is there, and you can eat and eat and eat. Yeah, everything is there, just scoop as much as you can. But there are some which are much portion. You go there and you're served in small plates. But you know why some place serves small plates and why some place serves with bigger plates or eat as much as you can. And I'm sure your experience at the restaurant will tell you that if you go to a very nice restaurant and you're served with small plates, you see, look at the time you spend there. You see, because you are eating in bits, and so you enjoy the food. Okay, you enjoy the food. There is no choking. You know, you enjoy it. You know, slowly, and you are able to take in, you know, some good portions, but in smaller bits, small plates. So with profit first, we say use small plates. And we'll go to the next slide, not now. But the small plate means that, you see, when you have your sales and you are going with the profit first approach, you start by allocating yourself some percentages. You take some percentage. Maybe you said, okay, I made a sale of 100,000. My salary, I'm taking that. Okay, so here we go. Right. So you have this picture. Okay, this picture, and I'm sure that will tell more stories. So when you have eat as much as you can, or big plate and small plate. Small plate means that you can stay there for a long time. Big plate means you would leave quickly. Big plate also means that, you see, because you don't take profit, you don't pay yourself in the business in reasonable time, you end up taking big chunk like that in one go. Okay, take it like that in one go. And you take it spilling over. This is where you put your business at risk. Yeah, this is where you put your business at risk. So you can see that you're taking more than you should have taken, because you think, well, I've done the business, how come I've not paid myself? And then boom, you take it. But if it is something you're taking over a small period of time, two things will happen. Number one, your business will not feel it, and you will also benefit because you would have an accumulation of profit of some sort over a period of time. Okay, so in the end, both will benefit. But if you take your profit like this one, like the picture on my right, okay, which probably will be on your left, but picture on my right, the big plate, what that means is that, you see, you're taking more than necessary. Because sometimes you are angry, you are upset, because why am I in business? Why is it that I'm always thinking of expenses? So out of frustration, you just take large sums, and that imperils the business. So use small plates, okay? We'll come to that plate, that percentages, serve sequentially, okay? And then remove the temptation. You see, sequence, make it a nice routine for you. Remove the temptation. We are going to show you in this profit first that when you have taken that small plate, don't keep it near by the business, put it away. So we go through that, take it away, hide it. You see, take it away. So out of sight is out of reach. You see, let me give you one simple example. If you are hungry at home and you go to your kitchen, you see, the first thing you do, you open the cabinet or the cupboard, and then you see, you've got all the crepes and chocolate and biscuits and things are there. You see, I mean, you tuck into them. But when you are hungry and you go to the kitchen and you open the cabinet or the cupboard and you don't find anything, you find a way to survive. You think, okay, let me cook something. But because these things were there, you will not cook. Number two, sometimes you go to the kitchen, you're not hungry, you're just there. And we go to kitchen a lot. These days that all of us are working from home. And the kitchen probably becomes the best place in the household. You go there, because every 5 minutes you go there, you open the fridge, as you do. I do a lot, open the fridge, check in there. You saw that there's something new in there. I go there, you open the fridge, I do that, you open the cup. If you open it and you find something there, you pick it up. But if there's nothing there, you are not hungry, it's just habit. So remove something from your sight. Remove the temptation. Hide that money you've taken from the business as your profit, take it away from your sight. And then let the rhythm flow, okay? Let it be regular. Let it be regular. So when it is regular, two things happen. Number one, you benefit because you would have monies being kept aside for you gradually. And then maybe at some point, okay, I need some, then you go there. It doesn't affect the business. The business will also benefit because it will get used to dealing with its own, managing its own affairs. That is the business. That's what I mean. Not you, managing its own affairs without the monies you've taken away. This is a win-win for you and your business. Okay, so now maybe I just have to give you 30 seconds to have a breather, to think through what we have said, because it's a lot in there. Now, there are practical activities which we are not going to do one for you or with you as I speak, but I've prepared some which I can explain to you. So let's go through the practical activities. And this sometimes takes time. You know, discussing when in our discussion with John says the accountant won't be happy. Okay, so let's ignore their angst first and just let's pretend they will just listen to you. Okay, so you set up 4 separate accounts. It's an administrative, not nightmare, but importance. Set up 4 separate accounts and call these accounts account 1. So here you have income accounts. This is where all your sales go. So that is already there. You already have it. Then you have your profit account. Yeah. And then you have your owner's pay account. And then you have your tax account. Okay, so you have income account, profit account, owner's pay account, and tax account. So whatever remains is what in the income account is what you would use to run the business. So let's focus on these 4 accounts. So when you've done your sales of say 10,000, okay, sorry, before we bring the figures. Then you have, they say, after this, set up 3 new accounts. Okay, 3 new accounts. And these accounts, the principle says, make these savings. Savings because so that you don't go there. You don't go there often. You don't use it as a debit card to buy things here and there. The 3 accounts will be for your profit account, your owner's pay account, and your taxes account. You see, before I go to the next one, can you see something happening here? You see, we haven't gone to the next slide yet, but I want you to begin to see that when the year is ending and the tax administration is beginning, what you begin to think of first is, how am I going to pay my taxes? What money have I got left? You understand, because you're running a business and using the money, you're running a business, you use the money, running a business, you use the money, running a business, using the money. And so the money hasn't gone anywhere, but it's gone in the business, and you're thinking, what am I going to use to pay my taxes? But with this approach, by the end of the year, you would have enough sitting there more than what you need to pay the tax. That's number one. You will have enough sitting there more than what you need to pay yourself as an owner. That will also be there, and your business will still be running. So the worries of tax payment is gone. Not that you are thinking of the taxman first, but yourself, your health, your mental health and emotional health, and all the stress that comes with the end of year and where to find money to pay taxes, that will be gone. Remember small plates. Remember small plates. Remember small plates. Sequentially, yeah, regularly, maintaining the rhythm. So you would be taking stress away from the business. Now, the third bit is determining the target allocation percentages. Now, this is called TAP. The target allocation percentage simply means that for these 4 accounts, you determine, or 3 accounts, determine what goes in there. So for instance, because we are thinking of small plates, we would say that for the percentage we want to allocate for our profit account, maybe it will be, say, 5%. 5%. So if you make a sale of 10,000, you put 5% away. And then, say, for the owner's account, owner's pay account, you said, well, I'm the boss. I'm running the business on behalf of my investors. So I'll put 20%. So you put 20%. So you go 5 and 20%, it's 25%. And then the tax account is, 19%, 20%, put 20%. So you have got 45% of your 10,000 sales put aside. The business has 55% of the sales remaining. Remember the philosophy. Yeah? Work will always expand to meet resources available to it. Okay? Remember that. So you have left 55% of your sales available to run all your businesses, the expenses and everything which goes in it. And going by the Parkinson's law is proving your business will survive. You will be happy. Everybody will be happy. This is what we call the TAP. So I put the seek help where possible there, because you see, you have to review the business and as you go along, because say for instance, the first year you start this, and I like it because this is the beginning of the year 2022. It is an opportunity for you to do something extraordinary. And then by the end of the year, we can come back to the same point and reflect to see, okay, we practiced it and what happened? Okay, so along the line, you get somebody to help you to say, okay, maybe let's increase the profit from 5% to 10, and let me increase my pay account to 25. So the review will have to take place because it depends on what is taken, and sometimes you can also bring it down. Remember, small plates gives you better calories intake, better joy in eating the food than taking one big chunk. That will choke you. That's not good. And it will choke the business. Thank you. So this is our activities. So now we understand the principles. So when we make our sales, yeah, all receipts from sales go to income account in bank 1. Yeah. So that is there. Everybody knows everything you sell goes into your account. So that account, you already have it. Okay, you already have it. So you don't need to set this one because this is where all your sales go, especially these days where people pay by card. And so most of your sales will go to a particular account. Then review your account balances at the end to see the cash flow trends. The cash flow trends to see, okay, how money is coming in and how it is being transferred to the other account. So let's go to the next one. Right, so what you do is that every 10th, and these 2 dates, you can vary them as you want, but for the sake of this principle and the philosophy behind it, this is the date which the founder or the person who propounded this theory used. And so I want to stick to it because it works. From you have 2 dates in a month, 10th and the 25th of every month. Okay, so it says you will transfer all funds in the income account in bank 1 to other accounts at bank 1 based on your percentage allocations. So what that means is that if you have got £10,000 in your accounts on the 10th, what you're doing is that you are going to transfer first your 5% into your profit account, your 20% into your pay account, your 19 or 20% into your tax account. Okay, this is you're putting all this into account 1. Okay, so when you do that, what remains in account 1 for the income account, that becomes the amount you use to run the business. You've taken away your profit, some percentage for profit, some percentage for tax, some percentage for your pay. So you make sure that that is out. Okay, now you then transfer everything from account 1. Okay, your account 1, you're going to put them in account 2. You see, the reason is that you are taking this money out of sight. Okay, but the reason why your profit, pay and taxes account has account 1 is because it becomes a transit point. That transit point has two functions. One is that it helps you to see a separation between the money you use to run the business, which will be there, maybe 55% will be in separate account 1 in the income account. And then number 2 is that it gives you the chance, it's a place where if you want to take any money from the business in terms of pay, that is the place you take it before you transfer it to account 2. So it's a transit point. So if it stays there and you don't have any need for it, then it goes straight to account number 2. Okay? So remember that we are giving you a template for which you disperse all your pay, your not the employees pay, yourself, yeah, you as the owner, yeah, you disperse all your bills and all your other bills from the and all your other bills from the operating expenses. So there's a separation. So your operating expenses account has nothing to do with your pay account. You have got something set up, and your tax account has nothing to do with your operating account. So you see that this is a healthy way of running your business. You are confident. You put something there for the taxman. You put something there for yourself. You put something there for the business. What a better way to run a business. Okay, now this is a practical illustration. We have £10,000. Yeah, we have £10,000 as our sales for the first 10 days. Yeah. So the dates have been chosen because of what the principle encourages us to do. So 10th, 25th, then 25th, and the rest of it. And then the income section is where your sales are. This is your sales income or your revenue or how you get your money. And then the top is your allocated percentages. And then the amount. And then the owner's pay, then the balance. Okay, so this particular one is an illustration only for the owner's pay. Remember, we said owners first. Owners first. So let's focus on you, because your survival is key. Your mental health is key. Now, so on the 10th, we have £10,000. You have decided to award yourself 10% pay. So on the 10th, you transfer 10% of the 10,000 of that amount into your account one. Yeah, account one. And you have said that, and maybe I need to make this clear. You have made it your habit of paying yourself £2,000. Okay, so the only time you pay yourself is when you have £2,000 or more in your accounts. Okay, so this is it. So first, up to the 10th, you can't take any money because you have only £1,000. And then 25th, you make a sale of 15,000. You take 10,000, you put it in account one, the place where I put the amount. Yeah, maybe I have to put account one there, but the amount goes to account one. So now you have 1,000 plus 1,500. Okay, so that gives you 2,500. So now you say, this is the end of the month. I am the owner. I am going to take 2,000. So 25th, you take 2,000 as your pay. Remember, the other remaining amount would have similar similar deductions going to the various accounts, but this is only focusing on your account first. So on the 25th, by 25th, when that deduction was made, you have got 2,500. This is the £1,000 plus 25th, 1,500, which gives you 2,500. You pay yourself 2,000, and then your balance is 5,000. 5,000 stays in account one, immediately transfer into account two, out of sight. Remove it out of sight. Then you go to the next month, 10th. Okay, your sales is 8,000. And I'm reasonable enough to vary the sales, because sales is not constant. Yeah, it's not constant. Sometimes it's high, sometimes it's low. So you have £8,000. Your 10% is 800. Your balance is 500, which remain from previously, plus the 8,003. It's not enough for you to pay yourself. So therefore, you say, okay, a rhythm, you see, this is maintaining a rhythm. And you can see 10%, it's not big, small plates. It's not impacting the business, and it's not making you superbly rich either, but everybody is happy. 25th, 11,000 income, you pay 10% yourself, why not? So now you have 1,100, okay, plus whatever was remaining, 1,900 plus 1,300, which gives you an amount for which 2,400, you take 2,000 and you're left with 400, you transfer it, and so on and so forth. You see, so by this, you can see that you are paying yourself almost every month without impacting the business. Small plates, taken sequentially, maintaining the rhythm. Helps yourself and helps the business. This is the flow. This is the flow. Okay, this is the flow. Okay, so here we have the full suite. Yeah, the full suite of the transactions. So here we've got the profit account, owner's pay account, taxes, and expenses. Okay. So £10,000 as an illustration, 10% go to yourself. That is your profit for the business, it goes there. Then you have the owner's 15%. So this time you say you're paying yourself 15%. That goes into account number 1. Taxes, 25% goes to account number 1. Expenses, 5,000 remain. So what this one means is that, you see, out of the 100% of the 10,000, you have taken 50% off and you have left 50% in the business. Work will expand to meet the resources available to it. The business will adapt, will adjust, will survive, will learn to cope with that money. Which also means that you as a businessman will become smart. You see, remember, work expands, you see, and cost will expand to meet the money available to it. When you have so much money there, then trust me, things come into your mind. Oh, I need a cleaner this. Oh, I need a chaperone. Oh, I need that. Oh, I need, because the money is there. But as soon as your expenses amount is small, or it's not small, but restricted, then you begin to think, do I need this? Actually, no. Do I need this? No. Why am I even using here? Can I work from home? Yes, and there is benefit from working from home because it has a lot of tax advantages. Why am I paying this? You see, so there will be so many ways. Can I do my business without actually being on the high street? Yes or no? So why am I in the high street paying so much money? Because I can afford it. This is what this is all about. Now the new formula. Sales, take away profit, equal expenses. Does that ring a bell? The focus of your business now is on profit, not expenses. Remember, we changed. The other one was sales less expenses equal profit. Now the zoom lens is on profit. You run the business for yourself. And so why is it that expenses has become the focus of your business all about? Have you asked yourself why? We need to disentangle ourselves from what is convention, what is generally accepted. Okay. Now there are questions which I'm sure you can answer. What do you make of this approach? What do you make of this approach? There's a poll going on, I'm sure. You see if you can answer this. Do you see yourself practicing this? Has today given you a new perspective of profit and your own pay as a reward for your entrepreneurship, without which the business wouldn't survive? Now, the gap approach and the new approach, that sales less expenses equal profit. Sales less profit equal expenses. Which of the two systems do you like best? Final word. Okay, final word. Okay, it's a lot of words here, but I just want you to take a second to look at it. You see, the philosophy of profit first places emphasis on you, the entrepreneur. You see, it forces you to reward yourself first against all conventions. This then brings an intentional resource constraint on the business. It brings an obstacle on the business, but managed well. This obstacle will then become the path, the opportunity for your business. We should also remember that within every obstacle, and according to Holiday, is an opportunity to improve our business conditions. And I said earlier on, constraints force us to challenge the status quo. It makes us to revisit the unconventional approach to doing things and improves and brings improvement in order to overcome the challenge that has arisen. the profit first approach might have a positive effect on your business health and yourself as an entrepreneur in the long run. Remember the punchline: work expands to fill the time available for its completion. Any questions or further questions, you can contact me or John. And thank you very much for listening. I've really enjoyed your company. Thank you.
So how would you apply these work principles to the current scary political situation? And the example given here is defending the Ukraine. That question is from Dick Wallace. The thought behind the question is how do you apply profit first in particularly scary situations where, albeit, let's take another example of COVID, maybe, when there's less assuredness about the money that will be coming in from sales. You know, how do you maintain this profit first point of view?
Okay, so yeah, and I understand that because the COVID has had a devastating impact on all businesses, yeah, big and small. And so I think you can agree that the COVID situation is not something which we experience every year. This has been something which is just thrusted upon us. And so we can't make a rule out of this, but in this particular climate in which we find ourselves, and depends on the nature of the business you have, it is still important to look at yourself as the owner and not to get swallowed by events and thereby not rewarding yourself in the business. You say COVID or no COVID, you are in the business because you want to be in the business. So you need to set something aside for yourself as a business person, however small it is. Remember the small plate principle? So here I'm not advocating for you to take any big money. See, if you forget anything at all, look at remember the slide on which I had two plates, big plate and small plates. Okay, so the small plates, yeah, the top, your percentages can be small, but in the end, it will be bigger for you by the end of the year.
When you were speaking about the task to set up separate accounts, so Darren's asking, are you actually speaking about physically, setting up 4 accounts? And if so, does this make it difficult for accountants?
Okay, thank you very much for that question. Yes, what I meant, I know this is an administrative nightmare, and I don't like to use the word nightmare, but it is something you must do. You see, the reason this is discipline. You see, without doing that, you would fall into the habit of doing the same thing all and over again. This profit first requires discipline. And part of that discipline is setting up the account and forcing yourself to comply with what you have set up. You understand? So if you don't do it, you just assume that, oh, it will be done, it will be done. And you can bet yourself by the end of the year, you are still doing the same thing. But try set new accounts. There are many banks which will accommodate that, and let the money goes as we have stated. And by the end of the year, you would come here and say something different.
So talking about additional costs potentially that maybe one should factor in when going down the profit first route in terms of administration costs and card costs of which I guess is tied into what you just mentioned in terms of the administration of those new accounts. And actually something that you touched on as well from another question, the uncertainty costs for things like COVID, and with profit first, how much should you be putting aside for uncertainty, and should this be factored in as well? And if so, is it should we be looking at percentages, or how would you approach that?
Okay, that is an excellent question, and thank you very much for asking that, because I know this probably will resonate with many of our audience. Yes, you see, we are in extraordinary time, and so which requires extraordinary measures. And so, yes, uncertainty, because I think, okay, I set 4 accounts, but you can go to the next, mile and say, okay, I'll make it 5. I'll set an uncertainty account. So the uncertainty cost account would be things that you haven't planned for, which you think may happen or may not happen. So what you're doing is just remember small plates, and I cannot. You see, I get bumps anytime I think of the small plates. It's so effective. Something small. So if you think you don't know the uncertainty, but you think something may happen, or there's a risk something will happen, say 2%. Put 2% as uncertainty cost, or 1%, depending on the size of your business. Yeah, 1%, 2%, something like that, and put it away. And remember the Parkinson's law: expenses will expand to cover the resources available to it. If you take away the uncertainty cost, how much remains the business can cope? If you don't take the uncertainty cost, what remains the business will swallow. So the Parkinson's law is a behavioral law which I think can be applied effectively in small and medium-sized businesses. So I don't know if that answers your question. I hope it did.
Yeah, brilliant.
It was brought to you from the Innovation Centre at the Knowledge Gateway at the University of Essex as part of the University Enterprise Zone, in conjunction with Oxford Innovation, who operate the Innovation Centre on our behalf. It remains for me to say thank you very much to Josh Clark for handling all the IT, for Neil Griffin for his presentation earlier, thank you Neil, and to Joshua Obeng-Nyarko for the presentation from the Essex Business School on Profit First. Very illuminating. I must emphasise I use it myself in real life, and it does work, so take it from me, that's an endorsement. And thank you to Essex County Council for funding today's webinar as well. So I now say goodbye and thank you very much indeed.